Hey guys, good evening. So we continue with our workshop series. So in this particular workshop, we go back to the consumption theme again, and we'll take three companies, three very interesting business models. One is Inflame Appliances, second is Varun Beverages, and the third is Control Print. Okay, so of course, like we'll be talking about these three models, right? We'll talk about it in a pattern as per the checklist, right? So again, like just before we start, like why do we need a checklist? Because checklist is a particular process that you follow. Because if you do not follow a process, you might make some basic stupid mistakes in the market. So a checklist helps you to look at things in a process oriented manner whenever you're analyzing a company and tracking a company in the future, right? Like what do we use in checklists? Again, like reiterating for you to understand better, we look at growth, top line growth, bottom line growth. We look at operating leverage, we look at the ROE numbers, right? We look at financials, income statement, cash flow statement, balance sheet, right? And we try to see, like, say, for example, where is the cash headed? We look at the CAPEX plans of the management. We look at the management outlook, right? And we also like try to since we read the con call transcripts, right, and attend the calls with the management live. So we also try to take the insights, right? Insights about the economic moat of the business and the competitive advantage, if they have any. Okay, so on that note, right, of course, these are the parameters on which like we do any company analysis, and you would see that trend in which we follow, right from starting a business model understanding, what is the products and what are the companies selling and how do they make money, right, till the end where we talk about, say, for example, like the financial statements and a bit more on valuations and everything. Okay, so on that note, I will share my screen. Okay, so we start with the three companies today. I will show the presentation. Okay, so the first company is Inflame Appliances. Okay, so let's first understand this model. What does it do? So as per this photo, you can understand that they are in the business of making electrical chimneys and kitchen hoods. Very recent companies. 2017 is the year of corporation. So as it is only a 5-year-old company, so you can clearly understand that it's a very small market cap wala company. It's like a penny stock out there. But of course, once we understand the model, you will understand like why am I doing this model and why am I like bullish on this whole story going forward. Okay, so as you can see, like total chimney capacity is 6 lakhs, right? So I'll tell you what kind of model it is. Like for example, if you see, right, previously in the 90s and the 80s and 70s, kitchen in any home, kitchen was just considered to be a place where you just go in, make food and come out, right? But now you see, right, when people are remaking their homes, remodeling their homes, like you see, right, you see the modeling, like the modular kitchens coming up, right? And kitchen is becoming a place where people, where people look for the aesthetic parts, right? Where they look for the aesthetic parts. And of course, like comfort is a big part in kitchen. You don't see kitchens today with a lot of, fog and smog and, and all those things, right? So one is the aesthetic part, modular kitchen, and the second is like the ease of accessibility when you are cooking, right? So both these things taken into consideration. And this company, Inflame Appliances, is targeting more and more market share in the whole electric hood and the kitchen in the kitchen segment. So very simple. Like for example, as I told you, they make kitchen chimney. So kitchen chimney models. Can you see here? So basically, they're a company specialized in making chimney models. And can you see they have more than 30 models? So you can say, right, they have 30 SKUs in their business. Let's move on. Yeah. So can you kindly see here, like you can see like the products that they make here. It's again taken from the investor presentation. So can you see here, like again, Inflame specializes in OEM and ODM. What is D here? A D is design and E is equipment manufacturing. So that means what they both manufacture kitchen equipment as well as they design them. So can you see here, like for example, these are called island chimneys, glass curved chimneys, right? So these are different kind of chimneys that they make for different kinds of style and texture and everything else, as well as the ease of application as well. So what do they do here? How do they make monies? So basically, they're a B2B business here. So they're not a B2C business. It's not like they make these kitchen hoods and sell it to the customers directly. So they are a leading manufacturer of range hoods or electric chimneys in India today. And they sell this. So basically, say for example, if there is a B2C company, they would come to Inflame and they would want Inflame to make these electrical chimneys for them, for their clients. Okay. So it's basically like a contract manufacturer. Okay. So you have understood, right? Like say for example, you have seen contract manufacturing in the pharmaceutical space with Syngene International. So you can say that contract manufacturing in the space of electrical chimneys is Inflame. Right. And of course, can you see here 95% of the revenues come from making chimneys. So this is exactly like the only thing that we need to focus on. Okay, so basically now let's understand. So here in this particular slide, we'll understand more about the business model as well, right? Like, and business model competition, right? Because you understand, right? When there is a small company making electrical chimneys, there must be competition. Now, what are the kinds of competitor? What are the kinds of vendors, right? We have to understand by understanding the business model. The first thing is like they want to make the entire, because they want to make the entire chimney in-house. That means what? That means now also the company takes a lot of parts, because for an electrical chimney, let's say for example it's made of stainless steel and all that, right? And you take a lot of parts from China. So what they're trying to do is they are trying to reduce their reliance on China in terms of getting the parts and the raw materials, and they want to make everything in-house. Because if you make everything in-house, right, it means that you're doing backward integration, and with backward integration you save a lot of cost, and which helps in boosting margins going forward. So that's how you can see. Plus, of course, you have more control over quality. And since they're a B2B model, as I told you, they're catering to customers like who are catering to their clients, right? So B2B companies must have backward integration. If you're a B2C company, then you might not have backward integration, because you have pricing power, let's say, over your consumer base. But if you're a B2B, then of course, like your customer, let's say, is the market leader. Okay, so then they would always want to like squeeze you and exploit you, correct? So that's why if you have a backward integration in place, you can always like protect margins for your business. So of course, they are aiming for a less than 1% rejection rate and warranty claims, and of course moving to 100% environmental friendly and all that things. Because today, of course, as I told you, right, when you're looking at a kitchen, you just don't look at a kitchen from a cooking perspective, you look at it from a beautification perspective, aesthetics perspective as well. Okay. Okay, so who are the major competitor of this business? Are Chinese suppliers, correct? So basically, you also have Chinese suppliers like giving these electric hoods as well. So if you see, majority of this company's competition is not from India but from outside. So playing on increasing penetration of electric chimneys, like going forward, say like let's say for example, if you see, right, 5 years, 10 years down the line, like when these new societies come up, these gated societies come up, right? People are moving more and more towards modular kitchen mode, right? Nobody's moving backwards, everybody. So this is also a play on premiumization as well, right? So when we have done premiumization like workshops, right, on before, like with Ethos and Sula, right, and all this Metro and all, so you would also see like electric chimneys and all, these are expensive items. So going forward, more and more kitchens in India would have electric chimneys. So that's what they're saying. Market for kitchen hoods growing at 15% in India. So that's the first thing I see is like if the overall market is growing at 15%, the market leader, and if you see this Inflame is one of the leaders in this space, right? They can grow at a faster pace, correct? So 50% of the business comes from Hindware. You guys must have heard about Hindware, right? The company that makes all these kitchen products and all the sanitary products and everything. So 50% of their business. So of course it's a very small business, 5 years, 6 years. So there will be client concentrations, which by the way is a risk. But for a very small business like Inflame, already getting such good contracts from Hindware is a good sign. So what are the raw materials for this? So if you are making electric chimney, right, you have to understand what are the raw materials. Stainless steel is a raw material, electric cables is a raw material, LED light is a raw material, and then PCB and switches are raw materials, right? So that means you think about this, right? So these are the materials, right? So what they are trying to do is like they are trying to source all these raw materials from India itself, right? They do not want to rely on any Chinese kind of imports when it kind of these companies. Like when I looked at electric cables, I thought of Polycab. Right, so they can get in touch with Polycab. I don't know if they are in touch with Polycab, but they can get the cables from Polycab. They can get the LED lights from, let's say, Cisca, or I don't know, maybe from another company that we did in a workshop, which is Focus Lighting, correct? And of course, switches, Polycab and KEI, they are into making switches, as well as Havells, right? And as well as stainless steels. India has a lot of companies who make stainless steel for their clients. So existing plant. Now this is the thing, right? I want my company to where the existing plants are running at full capacity, and they are like in the process of, let's say for example, opening a new plant. That means your CAPEX is demand driven, right? If your CAPEX is demand driven, that means you automatically say, okay, like that means your company is doing a lot of good business. There is a lot of demand out there. So the plant is running at full capacity. So the company decided to open a second plant at Hyderabad. So intent to double capacity. So that's a great thing, right? You have one plant, right, which was working at 95, 99% capacity. So they have decided to double capacity. These are the kind of businesses we should be interested in, right? Because यहाँ आपका growth एकदम double हो रहा है in terms of capacity, right? So that's why it got me very interested in this model. Yeah, look at the chimney sales ka volume here, right? If you look at H1 FY23 to H2 FY23, so this is half yearly in the last fiscal, H1 and H2. Can you see the growth here, right? From 75.5 to 86.7. These are the numbers in volumes. I mean, the amount that they have sold, right? So on a half yearly basis also, they're growing at a fast pace. And of course, on FY22 to FY23, they more than doubled their volumes, right? Which is an amazing story in itself. Although having said that, FY22 was more or less a COVID affected year. So basically in FY24 to FY23 will be a more rational, rational thing to look for when it comes to the growth rate. But since again, this company has such a low base, right? Growing on this low base does not become a problem. When also the company also says, right, that the industry is growing at 12, like around 15-16%. Okay, so this is the market share and penetration. Now look at this, right? So now what is Inflame's market share right now? 6%. Now they expect their market share to go up to 50% in FY26-27. Now, ye karke dega ki nahi, wo to of course time will tell, right? But if you can increase your market share like this, right, I'm pretty sure the stock is going to make a lot of money for its shareholders. So that's another way of looking at it. Revenue breakup, can you see here? They probably have 3-4 main clients. Okay, Hindware is the main client, CAF is the main client, Sunflame, and they have this Inalsa. But Hindware is the main client here. So what is the risk here? Is the client concentration risk. If let's say Hindware gets another say for example a dealer for their electric chimneys, then iska revenue आधा हो जाएगा, right? So going forward, what I would want this company to do is they want to diversify their client base. But also having said that, you can't criticize a company that started in 2017. When you start small with small number of clients and you diversify. So say for example, if the market share truly becomes 40% in 26-27, I'm pretty sure they'll have more than 15, 20, 30, 40 clients there. Okay, so that's the thing. So of course, what they're trying to do here is again business model. Like they have successfully localized over 65 chimney models, right? So 65 chimney models means 65 SKUs, and they have localized it. That's what I said, right? When it comes to stainless steel or switches, PCB, or say for example the cables, right? They are now taking these things from the local suppliers, then from China, right? So this is affecting their margins in a good way. Right. And second is, of course, they're a preferred manufacturing partner to brands at a reliable cost, right? So what they're trying to say is these are the brands that they are doing like a good business with, and these brands trust companies like Inflame. So 90% of the total production process are in-house, thereby reducing dependence on imports and external supplies. So that's a great sign, right? Again, the China. This is basically a good China plus one story as well, if you look at it that way, right? And of course, having said that, the company is providing kitchen hoods to Indian companies in their own brands and in direct competition to Chinese suppliers. So यहाँ पे major risk वही है कि there are Chinese supplies as well, right? So इनका competition हमेशा Chinese supplies के, the company doesn't talk about any Indian competitor in manufacturing of kitchen hoods. तो kitchen hoods लोग China से import करते हैं और ये company India में बना रहा है. So that's the fight, and that's what we have to track the business and see कि कहाँ पे जा रहा है. So as I told you, they are building a second plant in Hyderabad. So if you see, I'll show you this. Yes. So the first plant is in Delhi. Okay. Panchkula is a place in Delhi. Okay. So ये क्या करते थे? Since the plant was in Delhi, their market share was mostly like in north of India. And now they have opened a plant in Hyderabad of similar capacity. तो अगर आप इनका capacity देखोगे ना, यहाँ पे आप देखोगे, ये जो plant था, this is 45,000 square feet का है. अब हैदराबाद का plant है क्या? 40,000 square feet का है. So they have doubled the capacity, right? By opening the second plant. So एक से दो plant तो capacity doubled हो गया. So इसी वजह से if you see here, now why did they open a plant in Hyderabad? The management clearly says in the con call के like they're opening it in Hyderabad because now they want to expand their base in the south, because south में इनका कोई presence है नहीं, north में है थोड़ा बहुत, west east में है, but south में है नहीं. So that's why they want to open up a plant in Hyderabad. They also would want to open a plant in Mumbai, I think, or in any parts of Maharashtra, if my memory serves me right. But they would say two things, right? एक तो western market को ज़्यादा cater कर पाएगा, और they're also targeting the Middle East market. Yes. Now this is a very good capacity ka post expansion. These are the slides that I really like whenever a company brings out. So this is the chimney. 3 lakh chimneys banata tha, and along with the Hyderabad plant jo aayega, can you see another 3 lakh chimney? So 3 plus 3. Now they have the capacity of making 6 lakh chimneys. So going forward, you can clearly, and you can also see the commencement date of this Hyderabad plant. So ye plant चालू हो गया. It's not like the plant is not in commission और अभी चालू नहीं हुआ है. So they have got all the environmental clearances and they have commenced production. So इनका already production चालू है. So think about it, the boost in sales and the boost in profit that the company is going to get in the upcoming quarters. Yeah. So basically now here is the performance commentary again. Now here if you see. Now, the line that I would want you guys to focus on most is the last line here. Look at the last line, read the last line. We are focused on growth plans and are aiming to grow at 50% CAGR over the next 3 years. You know why, right? Because the capacity is doubling, right? From 45,000 square feet area से 95,000 square feet area में वे लोग काम करेंगे. And on this very small base, growing at 50% CAGR over the next 3 years won't be an issue for this company, right? And especially when, you know, they say like, now here is the thing, right? You have to like connect the dots here. 15% is the industry growth. And if you're an industry leader, then you would want to grow at a faster pace, right? To capture more market share. If you grow at less than 15%, then you're losing market share to a competitor, correct? So the industry grows at 15 and you grow at 50%. That means you're capturing more market share. That is exactly what they said, right? 3, 4, 5 years later, their market share will go up from 6% currently jo aaj hai, to around 40%. So which is amazing, right? And again, of course, you can pause the video and you can also read the other thing about a new oven toaster grill that they're also making. So they always keep on innovating as well with new products and matlab aas-paas ke products as well. So if you're selling, let's say, an electric, like I'll go back to the previous slide. So can you see chimneys ke saath, they also sell hobs and gas stoves as well. Right, so now you can see even the gas stoves का भी, gas stoves जो normally जो gas stoves होता है, stoves के बारे में क्या ही बोलना है, right? सबके घरों में होता है. So even the stoves का भी अगर आप देखोगे capacity is doubling, right? Hobs का capacity double. So the entire product line का capacity is doubling. Okay, so now can you see this? Now here is the thing, right? Inflame doesn't give out results on a quarterly basis, but on a half-yearly basis. So if you see H2 FY23 में कैसे किया compared to H2 FY22, right? So उस टाइम में अगर आप देखोगे sales are up 60% YOY. पैट अगर आप देखोगे तो मैंने इसका परसेंटेज YOY इंक्रीज नहीं दिखाया because from 17 lakhs now the PAT is 2.8 crore. I mean the PAT has gone up by 15-20 times, right? 15 times पकड़ लो आप, ठीक है? Less than 20 times and more than I think 15 times. हाँ. And can you see here the PAT margins have also gone up? Why? Because now they are getting supplies, localized supplies here, right? Because when you go away and you like buy, I mean like get the supplies from and you like import it from China, you have to pay more, right? Whether it's import duty and all those things, right? And plus, of course, if you get things from China and all that, you also get exploited by their manufacturers and whatever it is. So now I'll just, actually I forgot to do this exercise. I will just take a photo of this so that it helps me to help you to understand. Okay, financials kaisa hai, right? Because right now we have understood three things, right? We have understood the business model, we have understood how they make money, we have understood CAPEX, we have understood the growth outlook of the management as well, right? Now we have to check the financials of this company. Now, as mentioned already, can you see they give out half yearly numbers, right? And look at the half yearly numbers from 2,510 rupees for the half yearly ending last fiscal to 4097, which is an amazing growth, right? And just to again reiterate, the sales are up. This is 60% up. Other income isn't an issue here, right? Second thing is, if you look at the profit after tax, that's the thing, right? From 42 rupees to 578 rupees. So clearly the business is doing good. Clearly the business is booming. And now I'll tell you this, going forward, वो जो नया plant Hyderabad में खुला है, उसका product से इनका और भी sales में boost आने वाला है. That's why the management is confident in saying that sales will grow 50% CAGR in the next 3 years. So everything is fine here, no problems here. Even if you look at, say, for example, things like employee benefits, right? 240 से 337 हुआ. So employees are also not exploited in this business. Second is, of course, if you see that finance cost, finance cost is also pretty stable on a YOY basis. तो ऐसा नहीं कि finance cost has taken a jump. So everything is controlled. Like अगर आप देखोगे, these are the parameters that I check जब कोई result आता है कोई company का. And then of course, if you look at the earnings per share, right, from 0.27 the EPS went up to 3.83, right? That's why this business is doing very well. Now, going forward, let's understand the cash flow statement. Now, here is the game, right? Look at this. if you look at the full fiscal FY22 में, their cash flow from operations before working capital and fixed capital were negative because company profit नहीं कर रहा था, right? The company was a loss-making business, so profit before tax was negative, 202 रुपए, 202 rupees. But in FY23, they became profitable. This is why I'm covering this business in this workshop, right? Because my job is to give you the opportunities, the company that's turning around, the company that's doing CAPEX, right? And it's no stock recommendations here, but like, just to give you a flavor of like which are the companies that are booming and doing very well, right? Of course, on a small base. So of course, up यहाँ पे, let's say for example, multi-bagger stocks बन सकते हैं. Okay, so that's the thing, right? But here, if you again see here, look at this. There is a huge increase in receivables. So let's just focus on these pointers now. Point is like, so basically, if you see now, there is a huge increase in receivables because you understand it's a B2B model, right? And the more and more orders they get, first क्या होता है, these companies have to like produce the electric chimneys and the hoods and the stoves. They have to give it to their customers, right? And then customer पैसा देता है, जैसे Hinware हो गया and all the other 3 brands हो गया, right? So this is one of the things. But again, having said that, you can take all these numbers with a pinch of salt. Again, like reiterating, but very small company, you don't expect these kind of companies to have a cash flow statement as good as, let's say, for example, a Dabur or a Marico and ITC. ठीक है, वो सब आपका होगा नहीं. That's why if you see here, and since they're doing a lot of CAPEX, right? तो पैसा भी जा रहा है, right? If you look at the investments in fixed assets, correct? So last year, 266 rupees का fixed asset में invest किया था. But in FY23, the fixed asset investment went up almost 8x, 7 to 8x. That also shows that the company is hungry for growth. Or else 50% CAGR in 3 years नहीं आएगा. So these are the companies, I'll tell you, absolutely fine to have a negative cash flows, no free cash flows, because they're growing and they're a startup company. 5 साल पुराने companies वो भी listed आपको मिल रहा है. You don't expect these companies to have a free cash flow and all that. Generally, free cash flow उसी companies का मिलता है जिसका growth avenues घट जाता है. So that's the story here. Okay, so I talked about the huge increase in receivables and inventory. तो अगर आप देखोगे inventory में भी बहुत बढ़ गया, correct? Can you see? Inventory was a positive number, but the increase is minus 939. So 77 was the increase plus. मतलब क्या? ये company fixed capital और working capital में भर के पैसा डाल रहा है. तो इन्होंने जो भी पैसा बनाया, like cash flows before working and fixed capital, वो पूरा ही डाल दिया अपने business पे, which is absolutely fine because हमें चाहिए growth, right? अगर हमें growth चाहिए, even at the cost of a negative cash flow statement, nobody cares because growth के पीछे पैसा भागता है, right? तो अगर ये growth, अगर उनको market share capture करना है, grow करना है, बड़ा बनना है, so they have to ensure that they look for growth and capture more market share rather than just getting a good cash flow statement. So this is the trade-off that you have to do. So ये हो गया. And of course, if you look at the ROE number, मतलब net income divided by shareholder equity. Where is shareholder equity? You know this. Shareholder equity आपको यहाँ पे मिल जाएगा. हाँ. Can you see this number? 1400 से 41 हो गया. तो even shareholder equity like almost treble हो गया, right? So if you look at the net income of this company, income statement divided by shareholder equity, that is around 7.8%. Again, having said that, right? Negative में था. So the company did not have an ROE number in FY22. Now they have an ROE number of 7.8%, but don't look at 7.8 and think like अरे इस कंपनी को छोड़ दो. But आगे सोचो, आगे एक और प्लांट बिठाया, करेक्ट? तो आगे जाके जितना स्केल अप होगा, रेवेन्यूज 40-50% से अगर बढ़ता है, इसका आरओई भी डेफिनेटली आगे बढ़ेगा ना. तो मार्केट आगे का देखता है, फ्यूचर का देखता है, पास्ट का नहीं देखता है. इसीलिए लेट मी शो यू दिस. If I do Inflame का, look at the PE ratio. Now here is where people mistake it, right? People, लोगों को लगता है कि like cash flows negative है, no free cash flow, ROE 6-7%. तो इसका क्या मतलब? इसका मतलब क्या ये है कि कंपनी बुरा है? नहीं, कंपनी बुरा नहीं है, because मार्केट हमेशा आगे का देखता है. They look into the future rather than the past. Okay, so this and that's it, right? And all the other thing. Okay, one more thing I have to check here and to let you guys know here. Can you see here the long-term borrowing has also gone up, right? So you can also very well understand like, because agar aapka cash flow is negative and you want to say, for example, grow into newer geographies and get more clients and grow at 40-50%, you need to take debt. Correct? Because अगर cash internally नहीं generate हो रहा है उतना, because छोटी company है, so they have to take debt, right? But if they utilize this debt becomes like we have all understood and learned about this concept called operating leverage and financial leverage, correct? In our MBA colleges and all the other institutes wherever you studied, right? So यहाँ पे leverage आपको मिलता है. Leverage is like a two-way sword. If you use leverage in the right way, you get a huge pump in EPS and profits for a X percentage growth in sales. But then again, going forward, अगर company यहाँ पे risk क्या है? Risk Inflame का यही है कि if this company tries to like grow at a very fast pace और उसके वजह से say for example इन्होंने अपना financials को एकदम बिगड़ा दिया तो आगे जाके भी struggle आ सकता है, right? So ये वही बात हो गया ना, this company is trying to like like run like a cheetah, right? So agar if it can runs like a cheetah and if it doesn't lose its track, it's like a gaadi in fifth gear, correct? Then it will make a lot of money for its shareholder. But agar fifth gear में चलते चलते अगर वो मतलब भटक गया तो हाईवे से निकल गया तो बड़ा एक्सीडेंट भी हो सकता है. So that's the risk reward in businesses like Inflame. Okay, so that's more or less it. Let's move on to the next company. Yeah, so now we do Varun Beverages. Again, I mean, okay, before going to Varun, look at Inflame ka market cap 418 crore, 418 crore. Penny stock level mein pada hai, but the stock is at PE of 90. Now, when you have a stock of high PE, but the market cap is very small, that's okay. The problem is when you have a PE of 80, 90 and the market cap is let's say 1 lakh, 2 lakh, 4 lakh crore and growth nahi hai business mein, wahan pe you get stuck. Yahan pe kya ho raha hai? Yahan pe the PE ratio mein, if you think about this, the P by E is 90. अगर the earnings grow at 50% CAGR, then today आपको लग रहा होगा कि you're buying at 90p, but if it grows at 50, if it grows, वही तो खेल है, right? अगर ये कर पाएगा, if it does what it's saying today, then effectively 2-3 years down the line or 4 years down the line, the P will be 9 because earnings will have gone by 10x or 8x. I hope you're getting the point here, right? So यही point है, and of course the market share will go up, let's say from 400 crore to let's say 4,000 crore, right? So that's how the game is, right? So never look at a PE ratio of a very small market cap company and think, oh, ये तो बहुत expensive है, निकल जाते हैं. नहीं, पढ़ो इसको,